Good morning. I hope you're doing well. This is the COT data video for the week beginning the 15th of April. We have to remember this doesn't take into account all the crazy geopolitics that we've had over the weekend. This is from Tuesday night. It's reported every Friday, but that data that's reported every Friday is from the prior Tuesday. So while it's massively delayed, it's still really powerful because it tells us the bank positioning and how they're positioning for the week ahead. So as of Tuesday, they actually had gone quite long on the euro, and would come from 16,000 to 32. So it's definitely an increase on the euro. Obviously, we have to remember with the risk on or risk off nature of the markets, pending what happens on when we open tonight, it's going to impact your currencies. So I probably would imagine that the euro isn't going to be ticking up higher if we go risk off, but perhaps we're going to continue to be risk on. It's very, very hard to say. The risk calc on our spreadsheet will really help, and that's going to get populated tonight, and we'll know how the herd are positioned, and that's a very good indication for the upcoming session. So I've got a feeling that they'd be bearish because of all this news. However, it could be legitimately bearish because of the escalation in the Middle East. So we have to be really, really careful. The dollar is negative. We're just sort of treading water. It's a little bit like an alligator, and it could be ready to pounce. All right, so let's look at the yen. Negative, worth noting, but it looks like we're going to go back into positive territory. Yen, and this is the first time I've seen this. Okay, oh God. Wow, so that's really bad for the yen. Wow, 162,000 lots, contracts. Sorry, not lots, contracts. So that's actually quite bearish. And we've been below the zero line for ages, so be careful with the yen. I'll have to put that into Discord. So there's one guy who trades the yen all the time, so he's going to want to see that. Yen, no, keep yen on. We'll take off euro, put on Aussie, choppy. Okay, at least we're deviating, so that's okay. Because we didn't want to see them running parallel, because that was just weird. And now that we are deviating, so Aussie and yen are moving apart, which would be normal. Okay, so Aussie has ticked up higher, and 105 to 92. So it's a fair increase there. Got a long way before the zero line. Let's look at the pound. The pound has been quite strong. Okay, obviously we've got resistance here. We'd overcome it, and we had a quite heavy sell-off after breaking. So this could have been like a fake. This could have been a fake move. Also worth noting about the pound USD as well. Marco's done the chart for us on the weekly time frame, so it's worth checking that out if you're trading pound. It's a very good chart, so check your Discord. And we're breaking this big range basically. So yeah, basically quite a bit of selling. This is probably fake because this would have been like a resistance and we should have propelled higher, but it looks like it might have been a trap, and down we come. Potentially will come down even harder as well, depending on the risk appetite as well. So we're gonna have to keep an eye on the indices this week. CAD on. CAD is fairly sideways, minus 51 to minus 53, so it's negative, just a little bit more negative than the week prior. CAD, gold, okay, so it could be top in there, 207. Right. This is going to be heavy duty resistance here, okay, but we're just kind of gone sideways on gold, so that's of note. Be careful with that one. I think personally that would come up to eliminate retail, and there is no other reason for it, just to get them out of the equation, and because the retail causes a massive skew on price, and so they're trying to kick these guys out because they have to be trading with stop losses, and then it creates like a normal market dynamic. But if you're trading any currency, commodity, index without stop losses, then we're not going to see normal market dynamics. So it needs to get these people out that aren't trading with stop losses. All right, so hopefully that makes sense. The idea is with the stop loss is that they get out, and then we can create like a supply or a demand. But if they don't have stops and they don't get stopped out, price will continue and it'll keep going until they get blown up, and then we'll create that supply or demand. Okay, so that's what I think is happening. This is why gold pumping is that it's trying to kick out the dumb money, and it should have done a good job by now because we're all-time high. Okay, and in case you're wondering why that's going higher, it's very, very likely to do with retail sentiment. Gold off, and then we can look at New Zealand dollar, and we're ticking lower, so that's okay. We did go a bit into positive territory, but it was like, nope, no, we're going to sell, and so they did. And we've actually had the crossover of NU as well, where the dollar is stronger than the New Zealand dollar. So there's the NU sell set up, okay, because we'd actually weakened more against USD. Let's take off Kiwi and then Swiss franc. And then what we'll do tonight on the bulletin, we'll look at the sheet properly and we'll look at the retail sentiment as well. And Swiss franc's dumping as well, which is of note. We were going sideways for ages. We're actually breaking these supports. So a bit of weakness in the Swiss franc potentially. That's today's video. I'll wrap up now and I'll speak to you guys tonight. One and all, we have a strong disclaimer that we need to stipulate. The fact is that it's really, really easy to lose money while trading, and you absolutely must have risk management at the forefront of your mind at every trade decision. Before you enter, you need to know where your exit is. You don't just enter willy-nilly. You need to stipulate your stop loss, and you need to know about your sizing as well. All this information is in the Discord as well, and it's also on YouTube. So if you don't know your sizes and then you don't know your stop loss, you're going to encounter horrific losses, okay? And also it's highly risky, and the stuff that I put out on a daily basis, it's for your own information. It's not to be traded on its own. You need to be used with a trading system and with a risk management at the forefront of that system at all times. You can't trade without the risk management, because you will blow your money. And I dare say, if you're watching this video, you would have lost a lot of money and you've blown maybe an account or even several. So it's absolutely critical that you've got a very keen sense of risk management at everything you do. It's like crossing a busy street. You wouldn't cross the road without looking left and right. You'd wait for the traffic light, and then it would go from red, amber, green, and then once it went to green, you'd still be careful. Okay, so just a quick video there, and be really careful. It's a highly volatile market. In fact, it's probably the most volatile market you could ever get into, and while it can make you a lot of money, it can also cause catastrophic losses. So be careful at all times.